Welcome to the Successful Unemployed Show. I'm super pumped to have a fantastic expert who has started a coffee shop and then that didn't go so well, so had to get a job, but then has figured out a way to find money or make money so that he can provide for himself without working that dead end job, that just over broke job. So I have Brandon Neely on the show. Brandon, thank you so much for being here, man.
Hey, thanks for having me. I'm excited to share with you and also just hear more about you.
Tell me, what do you do now? Because I definitely we need to get talk about the coffee shop, and you shouldn't start a coffee shop, or at least that's what you were telling me. But what do you do now to provide for yourself and your family without working that dead end job?
Yeah, and just to be clear, whenever I did sell the coffee shop, and it's still going to this day, still kicking. I'm just not kicking it in there, not grinding. If you want to do all that fun terms, um, yeah. And ultimately, when we sold that business, we were going to. My wife was 7 months pregnant. She's like, you need to go get a job now because somebody's going to have to pay the bills. No one's going to hire me. And I actually interviewed with my mentor, who's my mentor now, and I asked if I could work for him. And he pretty much said no, because you're too much of an entrepreneur and you'll probably screw up my systems and everything else. I was like, great. So I can't even do this, which I wanted to do that because it really affected my business and the ability to sell my business, right? Because of this infinite banking system. But anyway, he ends up telling me, well, you can't do this. And then 2 months later, he comes back to me and says, I have an idea. How about you start your own business again? And your wife and you can do it together. And my wife was like, well, no one else is going to hire me. I might as well do it. So then we ended up going into the financial services world. Didn't realize that there's a lot of opinions about financial services, like a lot. All we knew was cash flow, how to manage cash flow, and how to make sure, if you're a business owner, your biggest risk is you. So we now created our brand called Grandma's Wealth Wisdom. The tagline is still, sometimes intelligence skips a generation. Is that and now we're kind of in a rebrand to Wealth Wisdom Financial, and thinking about wealth, not always about money. Money is important, but it's time with your family, right? I have a 4-year-old. I'd rather, like, I could make a lot of money, but sometimes it's about, hey, do I want to have a relationship? But you have four kids, I believe. I see them in the back.
Yep, four
Um,
kids.
you know, sometimes it's not about making $1 million. It's about, spending that time with them. So now we work from home and do all kinds of stuff in our business together.
So you guys do a financial services business, and that provides for yourself and your family. That's just terrific. Now, thinking about where, like, getting up the nerves to actually start up a coffee company, then going back to work or trying to go back to work, then starting the, like, was there a lot of, like, do you have to be more, like, it sounds like your mentor said you're more entrepreneurial, so you're going to do X, Y, and Z. Do you have to have that mentality in order to start and go on your own, or would you think that somebody would be able to, they're working a job, do a side hustle, eventually maybe build that up? Like, what are your thoughts about getting to the point where you can, be working for yourself?
Three things that I think about, and that is, as you're doing your side hustle or business, if you want to be there's two things. There's the entrepreneurs that want to be entrepreneurs, but they've never actually done anything or will do anything. And you know those people. Um, they want to be unemployed, if you will, but they're never actually going to take the plunge, right? And so when I left my corporate job, uh, pretty much burned the bridges, had some mentors along the way. They said I could come back if it didn't work out, but um, we stepped into that, and you have to know that you're called to something, right? Because it's going to be hard, right? Just because you're not working for somebody else and they're telling you to clock in, you got to have the tenacity, perseverance to keep showing up, to do the stuff when it is hard, when sales aren't going as well as you'd like, all of that. And I think a lot of people think it's just easy. We look at the Instagram things and they're like, oh yeah, I want that lifestyle. I'm like, it's not always that.
Yeah, absolutely. And so for me, it's anytime you're going to do anything that's worth doing, it's going to be rough. It's going to be hard. You have to push through things and persevere through it. But when you do, my goodness, it just makes life so much better because the easy things, everybody has easy things. But the harder things, the things that take time, that take effort, that's cost delayed gratification, do things now so you get paid in the future, or not necessarily paid, but like the payoff is in the future. It Very few people actually do that, and it's just a shame. So tell me about the financial services business, what you guys are doing now. What does that entail? Like, are you coaching people? Is it managing their money? How does that play out?
Yeah, I look at myself more as a cash flow management specialist, right? So, as a business owner, and this is the way the market works typically, is we want to get returns, and will put money into Tesla and expect all of this stuff happening. But yet, in our own businesses, we don't pay ourselves, or we don't do the things that are going to help our businesses grow. So I'm a huge proponent in this thing called Profit First, and it's a cash flow management system for business owners. So most of the time, if you're a self-employed or business owner or investor, you need to know the numbers, right? I don't know how many times I listen to Shark Tank and they're like, you don't even know this, and there's so much craziness that you just can learn, but they want to know the numbers, right? We as business owners can't just say, well, somebody else is going to do it for me. I mean, that's helpful to have a team, but knowing those numbers is super helpful. And then using the tools in place that can help us do the things we want. So I'm a huge proponent in infinite banking. We're a bank on yourself specialist. That's what's helped us ultimately be able to sell the business, use our cash value to get out of debt. When an emergency happened in the business, we were able to use it. For a down payment in our house, we were able to use it. And then ultimately we're working to buy a building for our office, and we're using our cash value from our policy, and we are financing our own thing. So everybody who's in business is in the finance business, regardless of if you're selling t-shirts or coffee, right? And so how do we take control of that, or in the banking business rather? And so I've learned and thought about, okay, where we put our money does different things. If I put it into something and I can't access it till I'm 59 and a half without penalty, that sucks. And as a business owner, our need for capital usually outweighs the long-term strategy for that other stuff. Not that you don't want to do that, but does that make sense?
It sure does, and I like how you focus on cash flow. I mean, when I realized that I need to stop working for somebody else, I knew that I couldn't bank on, like, I couldn't pay my bills with a stock that I own that was hopefully going to appreciate or go up in value. I couldn't pay my bills with that. But what I could pay with is money that came in my pocket. And so I started investing in real estate. That's literally how I was like, man, I buy one house and then I make money every single month. Like, that's amazing. And so with any business, if you focus on that cash flow, and I think Profit First is great. In fact, I did Profit First back in 2006 when I first started investing in real estate. I had no idea what that was. I just knew I needed to make money to provide for my family. And so it's like, I just make sure pay myself a profit. Now, I quickly want to touch on, I love the idea, and I really want to get your opinion on how do we not have financial education and financial wisdom skip a generation? Because I love the tagline, because I'm hoping, and I'm really educating my kids. My kids, I'm not going to literally give them money, give them things. They're going to have to work in the business. But have you really thought through, or what are your thoughts about how do we make sure it doesn't skip a generation, that we can pass this to our kids and then we can help them to learn how to pass it to their kids?
I have a 4-year-old, right? So he has a bank that's save, give and spend, right? And there's different things that you can do as you're just educating your kids. And most people don't even think about it. One example, I was at a trade show kind of thing, or one of those things where there's a lot of vendors out and you can make like deals. And I was talking to my wife. I said, never pay full price. Always say that's too much, and make sure that you lowball a little bit. Play the game. And so my son has $20. He's 4 years old, right? And he has $20, and he goes looking at all the toys, touches every toy, and he finds this little Iron Man toy. And he goes to the guy and he says, "How much is it?" And the guy says, $3. First thing out of his mouth was, "That's too much." Puts it down, starts walking away.
I love it.
And I was like, where did he get that? And I didn't realize he's listening to me in the back seat, right? And he ends up getting it for $2. Because my wife's like, well, say counter offer, right? Say $2. So he made a 33% savings because of negotiating. Now, I didn't even realize I was teaching him at that point, but those things matter, right? And not just giving your kids a huge death benefit, because this kid's going to be super wealthy because of the things I'm doing, but how do you educate them about the flow of money? How do we talk to them about it, and not just wait until they're 21 or 18 or whenever, but start early. And I have a podcast, so I'm kind of writing content in that things that he might pick up one day, I'm hoping.
With my podcast, I love that eventually, I'm not saying they're going to do it, hopefully they will, they can go back and listen, hey, what did daddy think about this topic? What did daddy do here? Because, I mean, we're able, and I don't journal. I hate journaling. So this is a better way.
I can't read my own writing, so that's why I don't journal.
So now I'm able to coach, obviously lots of people, but in the future, I literally have all this stuff for my kids. So I want to mention two things about what you just said. Number one, I love the idea of teaching them how to negotiate. I have not done that yet. In fact, that's one of my favorite things is to negotiate. I love negotiating, like helping my students. So I coach people how to invest in real estate. I had a student, he's a pastor up in Sacramento. He doesn't have any money, but he knows he needs to start investing so he doesn't have to always be a pastor. He has a house, though, that had a lot of equity. So I coached him. He took a home equity line of credit, took that cash, went and bought a house with it over in Ohio. With that house, he took, like, it was $80,000. We bought it. I think we got it for $78,000, but they were originally asking $118,000. So we negotiated all the way down to like 78,000. Now we fix it up. Now it's worth 150,000. Then he has it. Remember, he uses home equity line of credit, paid it with cash. It still has his balances on home equity line of credit. Now he's refinancing that second house, pulling that out, and then paying off this home equity line of credit. So now he has a mortgage and it's making him money. But it was that negotiating thing. I was like, man, I need to teach my kids that, because this is, my wife hates negotiating. She cannot do it. She clams up. She hates it. But I got to teach my kids that. So I love that. I'll give you one other thing. I love that the giving and savings and spending. We added one extra one for us is we give 20%, or we have the kids, any bit of money that they get, 20% goes to mommy to pay for food, pay for electricity, pay for responsibilities. Like, just because I make money doesn't mean I get to spend it all. So 50% goes into savings, 10% goes to God, 20% goes to mommy. The other 20% they get to save to spend on whatever they want. So what are your thoughts about doing something like that?
Taxes. That's teaching them taxes, right? Because what we don't realize as adults, or in general, I mean, I had my niece who's 18. She was all mad because she got her first job. They didn't pay her for 2 weeks. So she was upset about that. I'm like, well, that's how it works. Welcome to adulting. And on top of that, she's like, this isn't exactly what I thought it was going to be, a little more. And I was like, well, that's called taxes. And so even with ice cream and, things like that, I'm like, yeah, here's a tax. But the power that I think with like the infinite banking or those kind of concepts is saying, okay, if money's going to flow out of your hands, how can I use that money in the meantime to create an asset? So I want to teach him how to capture the wealth before it leaves your hands, right? In some regard, that's kind of like using equity line of credit, using a policy, because as business owners, um, we want to have a higher tax bill. Like literally, I want my taxes to go up. I don't want to pay them, but that means I'm more successful.
Yeah, 100% agree. And with that, if we were to say, focus on a cash flow, we have a business, say we have a side hustle, we have a small business that's moving forward. How do we then, because thinking about making sure that we're paying ourselves first, like that's one of the biggest things we should do. Is there any tips or any things that you could think of that we should start implementing now to make sure we're making profit for ourselves?
Yeah, I think it's all like the percentage model, reading that Richest Man in Babylon. I think you mentioned that in a previous podcast. 10% of all you earn is for you to keep. Savings is different than investing. So if you're in real estate, right, having those savings components just in case something goes wrong is important, right? And so know those numbers, do the percentage model versus just numbers of saying I'm going to save $200. Well, if your income grows, you want to save more, right? And so learning those percentages, and then understanding not everything that comes into you as a business is yours, right? That's why people get into trouble, is because they didn't account for it, and then all of a sudden the tax bill comes due, and they're like, "Uh-oh, I didn't know that was going to happen." So the profit first method is like, 50% is owner's pay, 30% OPEX, 5% profit, 15% to taxes, right? That's for traditional business, right? There's another book called Profit First for Real Estate Investors that, makes a little tweaks to it. But what I like is in my system, I combine profit first, and then one of my banks, if you will, just happens to be my life insurance policy that I'll use to do certain things like buy a building.
Thinking of infinite banking, and so what basically infinite banking, and you can correct me if I'm wrong, is you basically get a life insurance policy that you put money into, and then you could borrow against that and utilize that cash. Now, you're a professional, so you'll definitely be able to handle this question pretty quickly. Dave Ramsey there's a lot of people in this financial space. Dave Ramsey is definitely a very loud voice, and he doesn't like infinite banking. He basically says you're overpaying, and then you're just borrowing that money back. What are your thoughts about that type of thinking, and how is infinite banking really can it actually help us?
Yeah, I think that he says that like infinite banking is stupid, and how he does all that. And here's the thing, it's not always right for everybody, right? For a real estate investor, I think hands down, it's like one of the best things to do, because one is if you are self-employed or a business owner, you are your greatest asset. You would, from an insurance perspective, you would insure a cash machine, right? Like that's 100%, right? And renting versus owning, we would rather own than rent, right? So whole life insurance is renting or owning, right? Whereas term insurance is renting. And what I like is I love to have as the power of a contract, being able to know my numbers, know my if it's lean, I can lower my policy's premium amount. That's why you want to work with a specialist that knows how these policies work, not just a State Farm agent, right? So being able to know the cash flow of your business. So it works really well with real estate because you might have a windfall, right? That comes through, and then you put it through the policy, and then 5% simple interest, that it's a loan from the insurance company given to you, and the collateral is the policy, right? So it's kind of like a HELOC, right? Same thing, except instead of the house being the collateral, it's part of your policy. And then if you died, they're just going to subtract that loan from the death benefit. And so your heirs, you might have a tax bill that you never paid, but you paid it through the policy, and they've effectively never paid taxes, possibly.
I love not having to pay taxes, or at least deferring it, or figuring out ways to not pay taxes. So when you pay into that policy, Is that pre-tax money or is that after-tax money?
Yeah. So here's one of the things I don't like about paying taxes in the future. And this is just a question I always ask. Would you ever get into business with somebody where they make the terms of service in the future? They'll tell you the terms later.
No.
Do you think taxes are going to go up or down in the future?
Always up. Death and
So,
taxes. That's all you're guaranteed in life.
so is it better to pay taxes now or later? So for me, I like to pay my taxes now, right? Because then I know with a business, I want to know anything. I can mitigate any kind of risks and all of that. So paying your taxes now, that's why the Roth is so powerful, right? But the Roth is already like at a max, right? As if you're a rich person, you can't buy a Roth, right? They call the infinite banking concept rich man's Roth, right? So you can put more in, and you just want to build the right policy. So when I first started my policy, when I had the coffee shop, it was like $400 a month. That was it. That's all I could afford for both of us, and that was a lot for a coffee shop. But we were able to use it, and now I have a policy that is 50,000 a year, right? Quite a bit bigger, but it just changes. If you're in real estate, there's bigger chunks coming through than a coffee shop, if that makes sense.
No, it sure does. So if we were to utilize the infinite banking model to buy real estate, we would borrow against it, and it just sounds like we're going to be able to pay a lot less but at the same time, we still have to have paid into it, correct? Like, is there? Yeah, okay, got it. So there's little bit of limitations, meaning like you can't just get a loan for whatever dollar amount. You have to have a balance in there for that as well. So is there any nuances that we should know if we're going to be utilizing the infinite banking for our business or real estate investing or anything like that?
Working with somebody who knows and understands how business works and the cash flow, right? That's the power of this. Is you might have certain things, or if you're selling or you're doing fix and flips, lots of things go through your hands. So how do you capture that before it's gone? Right. So you want to like think through strategically as a business owner, how do we then have that bigger need for capital? And as you can use that, that's why the rich, and they call this like what the billionaires do or the Rockefellers do, right? They kept it in the family, right? So starting to think legacy, thinking about the kids. My son is going to be so set compared to me. And it starts, like if I'm starting at $400 a month, it's going to take a little longer. But, as you grow, you end up leveling up, right, as a business owner, and saying, okay, I didn't think I would be doing this kind of a thing. And you get to go from maybe single family homes to commercial real estate, because it's a bigger game, right? Thinking through, okay, where do we start? And you can start multiple policies, right? But you don't want to create a policy that's too big, right? You also don't want to create one that's too small, right? So that's something that making sure you have the right person that helps you implement this into your overarching strategy, because all it's meant to do is kind of be a placeholder. I want people to not just put it in there and forget about it, but how do you then use it to advance, right? Because, and again, the way I kind of think about it is it's for my retirement, it's tax-free retirement, right? That I know I'll have, that will not be counted as income the way that I design it. And older me is giving present me a loan. So I want to make sure I'm paying myself back, being a good banker to myself, and then I redo it again.
I love that idea. And Yeah, it's so when I teach people how to invest in real estate, there are many tools to get financing. It could be getting a loan, using a home equity line of credit, private money, infant banking is another one. So, man, Brandon, you give us lots and lots of great advice. I know people are going to definitely check out your podcast as well as find you online. How would they be able to do that?
Yeah, they go to Wealth Wisdom Financial. That's our YouTube channel. We have a podcast as well. And then there's a download that we have called the Still Method, stillmethod.com. So and you could totally use this, but the Still Method is set your sights, track your in and out, inspect your progress, look for 1% adjustments, and live deliberately. It's kind of like a spiritual practice that we've thought about, but with money. And so Still Method is just a way to think through cash flow, right? Um, and then if anybody wants to like really dive in, because I do think it has its place. It isn't just the one thing, but you again do your math. People oftentimes say, well, somebody else will do it. And I'm like, well, no, actually calculate if I pay for cash with it, what's the discount? If I use a policy loan, it just gives more opportunities. So,
Man, thank you, Brandon, so much for giving us so much great advice. I really appreciate you being on the show, man. Thank you so much.
oh, thanks. I love being unemployed.
There we go.